Hello everyone. So we are back again. This is the second episode of web series by name Emkay Alpha Mavens. I will quickly introduce about the web series. We started this web series in January after having done almost 25 episodes with all top-notch fund managers last year, and we got a very great response. And then we realized that from the perspective of adding value to the advisory as well as investors community, it is important to bring the perspectives of various wealth managers as well, apart from fund managers. So, because at the end of the day, ultimately from investor's perspective, he first deals with the wealth manager, and that is where we created a list. And this is episode number 2, and we have a very special guest, Mr. Karan Bhagat, who all of us know and who needs no introduction. I will quickly, talk about 2 more panelists, Mr. Vikaas and Sachdeva, who currently is working as a CEO with Emkay Investment Managers. Before Emkay Investment Managers, he has a pedigree of having worked with Enam Asset Management as well as Edelweiss Asset Management. Under his capable leadership, Edelweiss Asset Management, was able to do a deal of acquiring JP Morgan mutual funds. Apart from Vikaas, we also have Sachin, who is the fund manager, senior fund manager within Emkay Investment Managers. Sachin, again, has discovered a very unique framework called Equal Framework, which is a risk management framework, investment risk management framework. He will talk about that. And more importantly, now after this quick introduction, I'm handing it over to Vikaas for him to introduce our important guest, esteemed guest, Mr. Karan Bhagat, and start the show. Over to you guys.
Thank you, Kamal. Very warm welcome to Karan and Sachin, my fellow panelist. You actually started off by saying this gentleman needs no introduction. And while I was trying to frame an introduction, I realized there's so much I have to cover. So I'll make it very brief. This is a man I have seen rise right in front of my eyes. This is a man who has created a sort of a niche, brought a lot of respectability to the term private wealth manager. Earlier, there used to be private bankers. Now there is private wealth manager. And I'm telling you this, Karan, because this is something which your competitors have told me. I asked some of your competitors to describe you. They said, he has brought respectability to the name private wealth manager. I can't tell you how happy I was to hear that. But for the audience who still does not know you, I doubt whether there are any. Let me just introduce you very quickly. Karan is the founder, managing director, and chief executive officer of IIFL Wealth and Asset Management. He set up IIFL Wealth and Asset Management in 2008. Currently, it's the leading wealth management firm in the country, and it's got US $25 billion of assets, client assets under management. Karan has been figured in Fortune India's 40 under 40, Economic Times 40 under 40. He has received the URS Asia One Global Indian of the Year award. But for me, he epitomizes 2 very strong qualities. One is humility, and the other is entrepreneurship. Karan is an alumni from the Indian Institute of Management, Bangalore, and he's acquired his bachelor's degree in commerce from St. Xavier's College, Kolkata. So Karan, today is Basant Panchami. While we were doing our Twitter Twitter rounds and we were talking to a lot of people, one of the things which clearly came across is that this is going to be a session for learning, and Basant Panchami, learning, it all falls into place. I can tell you that when we were talking about this whole thing about entrepreneurs' approach to investment and wealth creation, yours was the first name which came to my mind. And I'm very thankful for you to take time off and come and address the audience here. Before I start off, I should also tell you that we invited audience questions. There are a lot of questions which have come in. There are a lot of questions which are coming in. And there's a special prize for the best question. The prize is sponsored by Finland Academy, which is a trading and investment education initiative. It's a research-driven, technology-oriented trading and transactions organization with over 6,000 plus strong community of traders and growing exponentially with each passing month. So without any further ado, let me ask you the first question. I've written a lot of questions. In fact, I have a whole sheet of questions here, but let me start off. What, according to you, is the essence of being an entrepreneur? And I'm asking you in the background of you having started your own business at the age of 17. I believe you started off with your own travel agency, and then you were teaching CAT aspirants at one particular point of time to where you are today. So from teaching CAT students to being a CAT in the world of finance, how do you define entrepreneurship?
So thank you, Vikaas. Thank you, Sachin, for hosting me today, and thanks a lot for Kamal for having me. And thanks a lot for the kind words. But I think entrepreneurship is something which is a combination of a few things. I personally believe. I think it's a lot of effort and commitment. I think that's one quality which none of us can kind of forget. And secondly, while we say it multiple points of times, I think modesty and humility is extremely important, because otherwise, we miss we miss the forest for the bushes in that sense, and very very critical to be there. But most importantly, I think it is also something which happens a little bit by. Am I audible, or is my voice echoing?
Absolutely.
Yes, Karan.
So it's also something which happens a little bit by accident, and I'll spend 5 minutes on it. I did my MBA from IIM Bangalore, and given my travel agency experience at the age of 17, 18, where I was exposed to a very tough market environment in a place called Ezra Street in Calcutta, which was full of cable kind of dealers. So at that point of time, the travel agency used to get a discount of 5%, and the cable market was very clear on either taking a 2% discount for upfront cash payment or a 2-month credit. And those days, obviously, interest rates used to be in the region of 1.5% every month. So effectively, in that sense, it was a very tough market to deal with. So one thing I decided in life once I finished IIM Bangalore, that I'm not going to get into sales again. And as I finished IIM Bangalore, as luck was to have it, my work permit, I got placed in a company called Diamond Technology Partners, which is also known as Cluster Consulting, which was like the McKinsey of telecom and financial services consulting in Europe. My work permit only came through end of September 2001. And as luck was to have it, in some way or the other, September 11th happened. My job never really came through. I got laid off before I reached Spain. And I think in retrospect, that was the best thing which happened to me. And I ended up with Kotak, which on those days was a day 3 company in campus, which is another story itself. So our placements actually finished on day 1. So effectively, a company like Kotak way back in 2001 didn't get a chance to reach campus. So I ended up, job scenes had really deteriorated in October, November 2001 because of the entire US economy moving into a recession, and ended up with Kotak Securities in Delhi. Did my first 6-7 meetings, assuming nobody knew Kotak in Delhi. We are a very small 5-6 member.
We've lost video, Karan.
Yeah, we're a small 6-member team, and the first 3 to 4 meetings, actually clients misunderstood me to be coming from Kodak instead of Kotak, and the remaining 3-4 meetings was really about coming from a security guard company as opposed to a broking company. So we kind of got both the words wrong, Kotak and Kodak. But what happened is I got responsibility and the ability to shine in a very small setup in Delhi, and most importantly, I was able to learn fast because I was doing 70-80% of the work. So I think in a sense, when I look back for the last 15-20 years, 2 or 3 things need to happen. Number one, you need to get lucky, which means 50 to 60% of the attribution is about which country you're born in, what time you're born in, and which industry you end up in. Okay, so these 3 are very very important, and sometimes you don't have a choice on these 3. In my case, it wasn't a conscious choice; it was a default where I ended up. Honestly, if you would have asked me in the end of 2001, the one industry I would it have gone into was private banking, but yet I was there without really having a choice. The remaining 20% is obviously about your immediate ecosystem, right? So as a professional, you have to be in a company or an environment which is looking forward and growing. Because if you're not there, then you can't do anything beyond that sometimes. So for example, let's say I ended up in brokerage in 2002. From 2002 to 2020, the growth of broking businesses has not been as large as what has been for private wealth. And a cat in broking would not be as large a cat in would be a smaller cat in wealth management in broking as compared to on the wealth management side. So a little bit 50-60% of it is the industry you end up in. The next 20% is in the company you end up in. So it's extremely important that the company you work for or the people you work with are open-minded, oriented, looking for growth, and kind of doing well. And the last, obviously, once you knock off this 90%, a lot of people ask me that this 90% is common for everybody. What then differentiates one individual to the other? Because this 90%, so many people joined private banking in 2001 and so on and so forth. The last 10% is most important, and that's really the effort and commitment, right? That's what you can do with yourself. And I think that last 10% really distinguishes each individual to his own. The first 90% can be common, but the last 10% is really unique. And in any ecosystem, that's really what differentiates it. And honestly, for me, entrepreneurship really is really a function of that. And for me personally, if you ask me, it's a combination of being at the right place at the right time, but combined with a lot of hard work. And in our business, a little bit of passion and interest for commercial interest means you have to like money, you have to enjoy money. You can't not have a feel for money. So a little bit of passion, interest, a little bit of some bit of math skills on the commercial side, kind of complement what we are doing. But broadly speaking, I think it's a combination in that sequence. 60-30-10 is what I would really kind of put it.
Wonderful.
Okay, Karan. So thank you so much for being so elaborate about your journey and very humble about you for being so frank about it. But every entrepreneurship goes through ups and downs, and I'm sure you've had your own share of challenges. You've had your own share of downtimes. How did you manage those, and what were those like? And I'm sure that those have been challenges. So your journey from becoming a wealth manager to an entrepreneur has had enough amount of challenges, enough amount of hurdles, I would say. What were those, and how did you actually have the perseverance, the grit to actually overcome all of that?
No, so I think I'm just thinking as you're asking. I have a very simple but very easy answer to that question. I'll give you a very nice example, which I've also used internally sometimes. We once had an offsite in 2012-13 in Goa. We were a small team of 1,800 people, and we called this mentalist. I forget his name, but he was a damn good mentalist. Okay? And he pretty much picked up any of the 100 of us, and he knew which holiday we had taken. He was able to decide, what's our favorite word out of 6 words, and so on and so forth. He was pretty much able to guess anything and everything about you. And then, he got 4 or 5 of us to stand right in the front. He put a glass or a cup on the table, and he said, I'm going to get the 5 of you to break this glass. And we said, how is that possible? He said, that's the power of concentration. And over the next 3-4 minutes, he got everybody to stare at that glass, and somehow that glass broke. Okay, so I don't know what that power was, but he was a good mentalist. He managed to do it. So we came back, and those days in 2013, the markets were correcting sharply. And every day we came to office, we saw our team a little down. People were looking left and right, spending some little more time on CNBC. So we said, chalo, let's do an experiment. Let's make some use of the offsite event. So we collected all the 100 people and went to the 4th floor of our building and said where the canteen is. We put a large projector and put the TV on, switched on CNBC. I said, let all 100 of us, let's look at CNBC together for 7-8 minutes with all our power and concentration, and let's see if we can move the index up, right? So, much to our surprise, it didn't happen, right? And the fact is, I think the only thing we can control in our life is our own variables, right? So I think the ability to focus on things which you don't have control over, and kind of keep focusing unidirectionally on things which you can control and influence, which you can make a difference on, is really what gives you an inherent strength and passion to kind of continue. And I think you need to do a little bit of what you love, but the ability to not get distracted with the noise, which you may have no control over, is very, very critical. And as you go through life and you start doing larger and larger things, the noise becomes larger and larger and louder and louder. But you have to kind of get up every day in the morning and focus outside that noise. Otherwise, it becomes really difficult to kind of continue steadfastly on what you are planning to do.
Okay. So, Karan, you did mention about this focus thing, and I'm going to elaborate a little this more. I have followed you quite a bit in the last maybe 11 years, since 2008-9, since you joined IIFL Wealth. And if I remember correctly, actually I had met you in 2009 along with Yatin, and that time I was actually trying to tell you that please, why don't you recommend my PMS to your investors? But if my memory goes right, you did mention to me that at this point in time you are more looking at investing in the fixed income products, which is largely the real estate developers and that kind of thing. Then come 2013, just before the equity markets actually were just about to pick up, you guys actually started moving a lot of your investors' money into equity funds. In fact, you guys got a lot of customized equity mutual funds. Then you come to 2016-17. You started focusing on the pre-IPO kind of funds, right? Which is where you had a lot of series launched, which did very well. And but there is another parallel to each of this, because in 2009-10, when I used to also meet investors, they used to say that they are investing a lot of money into with the real estate guys in an unorganized way, and you actually made it in a very, very institutionalized way. Come 2013, you created similar thing for the equity funds and a customized equity product for your investors. And come 2016-17, when I used to meet some of my investors, they were all looking at investing into unlisted companies where the IPOs are going to come very quick. And again, you created a product which was very institutionalized. So question, what I want to understand is that, was this by design, that were you really focused on listening to investors of yours, or this is where you had an asset allocation call, which is again very important so how did this all actually fall into play? Because you just talked about the focus, and that is where was your focus? Was it investors, what you were hearing, or was it asset allocation call? How did it all actually play out brilliantly?
No, so honestly, it's not an asset allocation call in that sense. I don't think so. We got the cycles absolutely right over the last 11, 12 years. We've got it wrong enough times, we've got it right enough times. I don't think there's any science to that. But, all what we do is, I'll answer your question slightly differently. I think, in some senses, we made innovation a habit. Okay? And that's really a cultural thing, because we make it a point that all of us, 30, 40, 50 of us, including some of the senior relationship managers, the product people, all of us sit together and keep thinking of new ideas. And I think that really leads to everything else. And see, at the end of the day, we are not inventing anything. We are innovating. So we are kind of improving things which are there. So essentially taking ideas, repackaging them better, managing for tax, managing for fees and expenses, and potentially putting it in the right vehicles so that it can be scalable. So that's really what we've kind of attempted to do. And simple things, right? So in 2009, for example, when we started out, in 2008, it was the worst time to start any business. But obviously, clients were only going to invest in fixed income. So the two products which actually gave us the highest amount of new client entries was the sale of NABARD bonds in 2008. So NABARD was basically sold to ICICI Bank was arranging it, and they hardly could sell anything because the brokerage was 34 basis points. NABARD at that time was quoting at 765, compounded for 10 years. And I remember LIC launched Bima Nivesh, I think, for 10 years, which was a 585 post-tax. Plus, it gave you an insurance cover for 5 years, which effectively otherwise would have costed you 20-25 basis points. So Bima Nivesh was 605. NABARD was 765 or 785, I don't remember. And the only difference was Bima Nivesh was paying 2.5% brokerage, and LIC, NABARD was paying only 35 basis point brokerage. Bima Nivesh had a cap of 3,000 crores, and I think that 3,000 crores got sold in, I think on the weekend, practically between Thursday to Monday. That 3,000 crores got sold, and NABARD just stayed idle. So we picked up NABARD, and we actually started buying it and selling it to our clients. And obviously, NABARD was owned 90-95% by RBI. So from a credit perspective, there was nothing really to distinguish between RBI and LIC. And actually, selling of NABARD on a post-tax basis of 680, 690, at that point of time, got us our first 50, 60 big clients, because that's really what clients appreciated. And much to our surprise, I think LIC subsequently, out of the 3,000 crores, bought 15-20% into NABARD, because both the products were exactly for 10 years, right? So effectively, LIC, obviously, the part of bonus it gave later of 25-30 basis points was a clean arbitrage between 610 and 785. So those are the small things we've tweaked, right? So, and this is a continuous process. You get these ideas, opportunities on a continuous basis. But the only way to be on top of it is to engage. Not only engage with the clients, I think engagement with clients is very important. Because we engage with clients, we hear ideas from competition, we hear our own ideas, we can debate our ideas. But most importantly, it's to engage with our employees, right? Because at the end of the day, these ideas come from anywhere. I'll give you a classic example. Last year, we were really struggling for new ideas. I think this was the end of August, September last year. So we actually had done a program in Singularity in university in the Bay Area. And they have a great program, I forget the name, but it's an innovation program where they essentially launch, they take one of the big problems in the world and they send it out to everybody and fund the solution, like hunger, famine in Africa. So we thought we'll do a similar program, and we launched a product challenge internally to all employees. Okay, so not only limited to the product team or the sales team, but all 900 people. And we kept a very generous price for the first and the second product, both in terms of recognition as well as in terms of reward. And shocking, actually, I think out of 850, 900 people, 650, 700 people worked on the product idea, either through teams or individuals, the back office guys, everybody. And, the idea which actually we got ended up making us at least $7 to $8 million over the next 1 year. And it actually came from an individual whose salary was less than 6-7 lakh rupees a year. And he was a junior guy on the treasury side. So, ideas can come from anywhere. Obviously, it was not a perfect idea. It was 85% there. But the fact that all of us spent time on going through these ideas, we debated it. We had the ability to convert it from 85 to 100%, right? And that's really what made the difference.
Fantastic. That's like an amazing insight to your journey. Thank you so much.
Kamal, I think you wanted to ask a question, right?
Yeah. So thank you, Sachin, for asking such a brilliant question. And, Karan, you explained it so well. So I will also talk about, year 2010 to 12, because that time I was in Citibank. And I know, you had hired a lot of Citibankers at that point of time. I know, all of them who are still there, whether it be Anirudh Tapadia or Vikaas, Shah, all of them are good friends. I have worked with them for a long period of time. One thing, which at that point of time, I also had offer from IIFL. But, one thing, since we are talking about entrepreneurs' approach to wealth creation and investments, so this is a real question that comes to my mind, because I have also taken up a similar role now, having started PMS AIF World, and building a very good team and building a very good organization culture is a very, very big backbone for any entrepreneur to bigger institution. And IIFL Wealth, I think, has done a brilliant work in that regards. And that is the reason I quoted, this entire thing. So what is it that, what is the magic that IIFL Wealth is doing under your able leadership, that you have not only hired one of the best talents from the industry, you have also retained that best talent in this industry, and this industry which is otherwise notoriously, known for high attrition rates. But in your case, in IIFL Wealth, attrition rate for the best wealth managers is almost zero. So what is the magic that you guys are doing?
So I think it's a combination of two things. And I think the second thing declines as the organization becomes larger. But for the last 10 to 15 years, I think it would have been the foremost thing. So I think the ability to share equity and make everybody feel like partners, big or small, is not very important. Obviously, everybody can't have the same amount of equity. And being transparent about it helped us a lot over the last 10 to 15 years. But the importance of this over a period of time declines because the new talent you get, obviously, people who joined us in 2015-16, very similar to, let's say, the City team who joined us in 2012-13, would not have the same economics in terms of stock options as compared to the team in 12-13. And similarly, would not have the same economics as the team in 2008-9. So on a going forward basis, obviously the importance of that declines, but the ability to share it and be transparent about it adds a lot of value. But the most important thing, which I think allows us to keep our attrition low and our RM retention high, is the single-minded focus that we have to empower the RM with the best platform when he's doing to the client. Okay? I think that's the single mantra which keeps us going. So at the end of the day, when the RM goes home, he has to believe that I'm able to get the largest wallet share from my client because I'm in IIFL Wealth. And I have all the resources available with me to be able to service the client. And secondly, he also has to believe that this firm is sensitive about the needs of the client. There's somebody there 24/7 to solve the problem of the client and solve his problem. And I think as long as we are able to maintain these two things, attrition will be low. Because heart of hearts, every relationship manager wants to do the right thing for the client. He wants to do the best thing for the client. And at the same time, he wants to have the highest wallet share and wants to be compensated the maximum. Right? So it's all the four objectives together. It is not one objective or the other. And really, the platform which is able to, in some ways, meet these four objectives in a balanced way is really what the RM is after. And I think in some ways, by investing on the product side of the business, by investing on the technology side of the business, by keeping our culture open and transparent, we've been able to get this right mix where we're able to provide the best platform to the RM to service his clients. I think that's really the golden truth. There's really no other way to kind of keep your attrition low.
In fact, that brings me to I have an observation and I have a question here. Okay, I think I'll go with the observation first. I'm putting on the hat of Karan Bhagat at this point of time, and I'm looking at investment opportunities. You have an unlisted fund in which you invested, or rather, you have a fund which invests in unlisted opportunities. So I'm saying that what are the type of managements which I will look at when I invest in them? We have a proprietary model called Equal, which has been made by Sachin, which actually is the country's foremost model defining governance in ESG. You will not find a better model here. It's one of the reasons we've avoided a lot of dodgy managements. But wearing your hat, if I have to look at unlisted companies where I'm investing, okay, what are the qualities that Karan Bhagat will look at when he's investing in other entrepreneurs? That is the question. And the observation is something I will tell you after you give me answer to the question.
No, so I think it depends a little bit on the capital at the stage at which you're coming into the business. I think in today's world, some of the early stage businesses, you're not necessarily able to kind of identify some of these parameters extremely well. But I think I think in terms of order of priority, I think 60% would go to passion, sincerity, effort, and commitment. I think there's no substitute for that. 20-25% will really be because that allows you to deal with all kind of unknown variables, right? Because there are going to be 10,000 variables in the journey, and the ability to deal with those 10,000. See, as an entrepreneur, you unfortunately become responsible for all mistakes, and more often than not, those mistakes are not made by you; they're made by somebody else. So, in that sense, the ability to put your head down, keep a calm mind, and deal with that variable becomes very, very important. 60% of my attribution would really go there. 20% is to do with the right intention, because see, there is no way to determine beyond a point probability of success, right? So but what happens is 95% of the time, if the intention is right, the probability of a good outcome becomes much higher. And you want to go after people or go behind people where you believe the intention is right. Does that mean every decision that person will take will be right? The answer is no. it's not humanly possible to take every decision right. I think we've all taken decisions which have not turned out as we would have expected it to. But as long as our intent behind the decision is fine, it works out well. So I think 60% for me would be effort and commitment and sincerity. 20% would be pure intent, and the last 20% really would be things like domain knowledge, industry, sector. Those really would be the last 20% in my mind.
Interesting. And the observation I think I wanted to share with you, which again a lot of people in the industry talk about. I've been told that you're very, very open in terms of sharing your ideas with people, your strategies with people, and you're one of the most secure people around in terms of sharing it. So when I ask people what makes Karan do it, and anybody else does not be as sharing and as forthcoming. So the answer I got, which is an observation I'm sharing with you, they said that Karan is very secure because he knows that he has one thing under control, which is execution. Strategy is one thing, execution is quite another. So by the time somebody else does the execution, which IIFL does, probably you're on a different trajectory altogether. So would you define IIFL Wealth's competitive advantage as sheer execution in terms of bringing an idea to the customer's plate?
It's I think, we look at ideas very differently, because for us, ideas actually is a great client acquisition tool, but it's not the end game because it's only the start. You really can't build a business on ideas, but you can definitely acquire a lot of clients through ideas. And all some of the ideas we've discussed, all of those have been used really as client acquisition tools. The success of the firm, however, beyond that, works on the ability to use this idea to convert a client and then be able to move into a much more scientific process of investing and keeping the ups and downs as low as possible, because really most of our clients come to us for, in a sense, wealth preservation plus beating inflation by 200, 300 basis points rather than the maximum amount of return. And we are very clear about it. Clients are very clear about it. But, it's very difficult on day one to go and differentiate your advice versus a competitor's advice. On day one or day zero or day -1, what appeals to the client is potentially a product. But the client is going to stay with you on day 100, provided you're able to move him from a product relationship, but to a really more process-driven, investment portfolio mandate-driven relationship. So that's in some senses, I think, we've been able to kind of do both ends of the spectrum. We've been able to kind of acquire a lot of clients through our product innovation platform, and on the other side, we're really able to kind of, in some ways, move it towards a more scientific, data-driven approach to wealth management over a period of time.
Interesting. Sachin, you had the question.
Yeah, Karan. So, this is one of my favorite questions that I ask all the managements. And since you are the CEO, MD of IIFL, I would love to understand from you. You are already $25 billion of assets under management. You are already probably 10,000 crores plus kind of market cap. What's your vision for IIFL Wealth from here on? I mean, say next 5 years, 10 years. Where do you want to be?
Honestly, I wish I had a better answer to your question, but I don't. So I haven't looked at life that way, where you want to be after 5-10 years. I think 3-4 things which will shape us in some ways. So I really don't have an end goal, but we're really sure of what we want to do. So I think from a business perspective, we are very clear that we want to be in the business of managing money. We don't want to kind of diversify beyond that. So that kind of really leaves us with 3 businesses: wealth management and alternate asset management and the mutual fund business. In some senses, these are the 3 businesses we want to be in. In terms of size, honestly, I think we've got a sweet spot because the country is growing, and apart from the nominal GDP growth rate, which we can argue to be in the region of 10 to 12%, which will automatically over a period of time grow our AUM by that. I think the number of new clients coming to the industry is crazy. So the number of equity dilutions, either through secondary, primary, sale of businesses, dividends, sale of stock options, the amount of new money which is coming into the country is just unbelievable. And what I really would want to dream about, that each and every person who ends up getting this money essentially deals only with IIFL Wealth, right? So we are able to get 60-70% market share today, but I think that's really and the rest, honestly, from a business perspective, will follow. I think for us, we've carved out a niche for ourselves on the wealth management space as well as the alternate asset management space. I think we've got different ideas on the mutual fund side. Over the next 12 to 15 months, we'll see how to kind of build that business out. But that's a third engine of growth which we can potentially look at. Till now, we've not really kind of gotten into it. We've not invested our time into it, but we've been focused on the first two businesses. And I think, honestly, if you ask me, for us, what will be key to go deeper and deeper into these three, and obviously avoid doing big mistakes, right? So I think mistakes will happen, but try and just avoid doing the big mistakes.
Right.
Actually,
Karan,
sorry, go ahead, Sachin.
Yeah, Karan, but if I think about it, like as you said that you said that you need to have some bit of commercial sense, like in the sense that you want to become rich by making rich the richer, right? In that sense. But so what really drives you? What's your really passion, which is going to, in fact, what has been the passion to drive you so far? Let me ask you that.
I enjoy it, honestly. There's no other passion really. I think I enjoy it. Even today at heart, I'm a relationship manager. I would love to be out meeting clients, which I don't end up doing that often. And I enjoy investing also. So I love meeting people. I have a natural. I think I have a natural gift to be able to figure out the P&L balance sheet quickly. I'm able to meet 8-10 people on a daily basis and make quick investment decisions. I like it. And it keeps me going. There's really nothing else. From a journey of becoming rich along the way, I think it's a good thing. There's no harm with it, and it was one of the initial drivers for me also. But definitely not a driver today, but it was definitely a driver 10-11 years back, and I can share a quick story on that. Obviously, wealth management in 2006-7 was very different. It was a much more broker-driven kind of approach as compared to a scientific asset allocation approach in 2013-14, from that time onwards. And back then in my earlier firm in Kotak in 2006-7, we used to have a fairly clearly defined dashboard where typically if you win 100 rupees for the firm, you get 15 on rupees, and 15 rupees broadly represented your cost. The remaining 35 rupees represented the cost for the firm, which effectively meant, this was my first lesson, right? When I moved to Bombay, it was about the 15 rupees of my cost, the remaining 35 was really the corporate cost, the cost of my boss, branding, everything put together was the remaining 35 rupees. And broadly, the remaining 50 rupees was the profit before tax for the firm. On a very nutshell basis, 15 rupees for me effectively meant 9 rupees on a post-tax basis. And for the firm, 50 rupees meant 36 rupees post-tax. So I was at peace with this ratio when I moved to Bombay in 2005, because it basically meant 1:4, which I was very happy with, because it effectively meant that if I was to go out on my own, I would need to do at least a fourth of the business I was doing sitting inside the platform. Honestly, when I thought about it, I thought I won't be able to do a fourth of the business outside on my own. And obviously, while being in an organization, you can take a month holiday, you can go for an offsite, you can hand over your work.
Yes.
And, you can still kind of pretty much make the same money you would make on your own, because you would need to kind of go out and do at least a fourth of the business. And then I moved to Bombay in 2005 and 2006 once Kotak got the banking license, and that's really when this entire concept of PE multiple really struck on me. I was fairly late, 2006, so not too long back. And then I really came to Bombay, and I understood promoters are not really necessarily working for the 35 rupees, but they're really working for the 35 rupees, which is getting multiplied by the 20-30 times. And on those days, obviously, the capital gains tax was 0. So effectively, the 35 rupees became 1,000, and the tax on that 1,000 was 0. So effectively, the equation now became 9 rupees post-tax versus 1,000 rupees post-tax, which was 9:36, and gave me peace. Suddenly, we started tickling the left part of my brain, and my Madu commercial part of me being from Calcutta appealed to me, and that's really when I decided I want to do something on my own. And the 9-2000 equation kind of got me to try and move to the other side of the table. So that's really in some ways, yeah. So you have to be commercial. When you say commercial, you don't need to know how to do integration and derivatives and so on and so forth. But at the same point of time, you have to have a commercial sense of money. You should like pluses and minuses. You should be fast in multiplication. All those things, right? So they're really basic stuff, but it comes with the job. Right? So.
Fantastic, Karan. Thank you so much. This is what I was looking for and very helpful. Thank you.
I think probably this has been one of the most insightful pieces of communication I've heard in a long, long time. The left side of the brain, 9:1000. I think this is very, very profound. Thank you so much for sharing. There are so many questions coming in the chat box. So I think I'm just going to ensure that each of us ask you one question each now, and then we'll move to the audience questions, because there's a lovely prize awaiting the best question. So I'm going to ask you a very different question. I'm going to ask you a very light question. Just taking a break from all the heavy answers you've been giving. You talked about the attributes. You talked about being commercial. So I know you're a damn good poker player, and I know why now. But if you were not here today in IIFL World, what you would have been doing? What would Karan Bhagat be doing today if he was not sitting here?
Because honestly, I don't know, but I would definitely still be investing here. That's for sure. I think I would definitely not be playing poker. I play poker once in 2 weeks. I like the game, but I don't love it enough. I think to spend that much time in it. But I would definitely be investing in some way, format, or the other. And I would have got bored of consulting if I would have joined consulting. I think for me it's a little too much of an helicopter view. So I would definitely be in some way or the other attracted to some facet of banking or investments. And that's really my calling. I don't think so I would be doing anything else.
Now, that's a wonderful answer to a lot of people who ask, ye time mein market mein ghusna chahiye ki nahi? Should we invest in this market? So here's a guy who's saying that if I was not doing anything else, I would have definitely been investing, and I would have probably stayed invested all through the years. Wonderful answer. Kamal, over to you for the next question, and then to Sachin before I take the audience questions.
Right. Thank you so much, Vikaas. So I will ask this one last question, and then you can move on for the audience questions. So Karan, you mentioned very candidly and very humbly that you're still a relationship manager, and at heart you're still a relationship manager, and you're the most important, one of the most important things that you would be doing if you were not founder of IIFL would have been, say, investments. So, with regards to this, I want you to share some light in terms of sharing maybe 3-4 learnings of being an entrepreneur over the last 10 years. I'm sure the way you used to act as a wealth manager in 2008, 9, 10, and the way now you would act as a wealth manager in 2020, 21, over the last 10 years, because of your own experiences having been an entrepreneur and having been an investor, your advisory and your wealth management skills would have evolved. So, put yourself now in advisor's shoe and put yourself in investor's shoe. What are the key learnings that come to your mind? Maybe advisor separately and investor separately.
Kamal, I'm going to give a very boring answer, but that's the only answer I have. I think over a long period of time, and I've learned this from clients more than myself, I think, like everything else for clients, this is really wealth preservation. This is not wealth creation. I think for some of us, this can be wealth creation. If I'm investing my money and I'm in this business, I understand it 24/7. Similarly, for let's say Mr. Junjunwala or Mr. Damani, they can look at ROEs of 15, 20, 25% on a compounded basis. For most of our clients who are in a business different from the business of investing, they really make their 20, 25, 30, 35% ROE by putting the hard work, sweat and labor on the business they're doing. And that's really the only place they can get the 20, 25, 30% ROE on a compounded basis in the longer term. They are able to appreciate the volatility. They stick with their business through thick and thin, good and bad. And honestly, when they come down to investing large sums of money, the best way to do it is to manage volatility, keep the asset allocation extremely tight, and keep the objective somewhere between the 8 to 12%, depending on the client type. And I think that by doing that, you do a big service to the client, and you essentially ensure that the client sticks. Most importantly, not with you, but more importantly, the portfolio stays invested for a long period of time. And I think honestly, the biggest creation of wealth is happened for people who've been able to last through very bad periods of volatility and stay invested. And whenever we've tried to time things for clients, volatility has got the better. And even though you might have taken a, it's like that. How do I put it? Kotak in 2007, which was 94% of my wealth, when I quit the firm in January 2008. Fast forward 8 months later, nothing wrong with the bank, excellent bank, doing extremely well. It was still down 78, 80%, 85% from the peak. It was reduced to 15% of the value. Now, obviously, if that represents a very large part of your wealth, you do only either of the three things. And if you say that you would have done the third thing, I wouldn't believe you. So the 100 rupees, when it comes down, you would have panicked and sold it somewhere at the 40, 50 rupees. If you didn't sell it at if it represented 80, 90% of your wealth, if you didn't sell it at 40, 50, okay, on the way up, when it came from 15 to 40, 50, you would have definitely sold it, because you would have seen the 15 rupees, you would have said at least half my money has come. If you didn't sell it at 40, 50, you would have definitely sold it at 100 as soon as you got your capital back. The third kind of person is who would have seen this entire volatility on his entire money and stayed invested with 100 becoming 15, and that 15 potentially today becoming 2,500, 3,000. So that's not going to happen. And that can only happen if it's your own business. It's not going to happen if you're investing, and that's a reality which I've understood, and I try and explain it to as many clients as possible, and ensure that the asset allocation is moderated, and it's something which they'll be able to tolerate and stay invested through all points of time.
Yeah.
Got it.
Sachin, do you have a last question to ask before I take the audience?
No, I have many questions, but I'll keep it to last. So, yeah, okay, Karan. So, since we are talking about, you being in the wealth management, you are actually the game changer to my mind in the Indian space of the wealth management. I'm sure there is this one new asset allocation that you are talking about with your investors, and which a lot of us would like to know. And I believe that you are fairly glued on to the internet space, and you do realize, there is a lot of wealth creation that's possible out there. Just wanted to get some perspective of yours on that space.
So honestly, I think as a industry, as a community, we got this a little wrong, right? We are very late in the stage, but somehow I think 2017, 18, it started hitting us. We did do a couple of funds which have done extremely well from that point in time. But overall, I think we missed the power of technology. We were underexposed. I think a lot of us didn't end up. We had access to the resources. We didn't travel to the Bay Area. We didn't really understand how the game was changing. And reality is, the fact of the matter is, the power of just computing has changed manifolds over the last 15, 20 years. Supercomputer of the mid-90s is basically now available on each of our phones. And that has caused a massive shift. And we ended up not appreciating a lot of this shift and transition over the last 4 to 5 years. But better late than never. I think India will also see its share of large tech unicorns. And I think we participated in that now in multiple ways. See, valuations will come and go. They will adjust. Some of these things might be at euphoric highs, and some of them may not prove to be the best investment decisions. But overall, I think from a change in business model to a behavioral change in how all of us think and approach things, I think that thing's permanent. That's going to stay. And there will be several business models which will last and become much larger. But all of them will have to undergo some change, and we can get the pricing wrong. We can come higher, we can come lower. It's possible. I don't think so. All of us will get all of that right, but it's interesting, and we've seen the journey of 4 or 5 of these companies very closely by virtue of the fact that we've been invested in some of them, like Nazara, Unifor. There are many businesses we are invested in, and it's very interesting to explore and understand these businesses. But I think there's a long rope. Sometimes, obviously, it becomes exuberant because of the valuations, but outside of that, I think there's a long path ahead.
So, Karan, we're going to start off on the question answers. Bharadwaj and Bharadwaj, in fact, quite a few other people are asking, what's your opinion on Bitcoin as an asset class?
I'm as amazed as everybody else is, so I'm not a big fan of Bitcoin. I just feel two reasons. While I appreciate what a Bitcoin is, I think I get a little confused by the fact that eventually central banks will come up with their own digital currencies, and at least at that point of time, the acceptance of these alternative coins will become a bit of a challenge. And honestly, I think if you would have got this question right 3-4 years, 5 years back, then we still could have taken a different decision. But given the fact that we've got this wrong over the last 4-5 years, at least today the risk reward ratio doesn't seem favorable because it's subject to too much regulatory intervention, and we really don't know how it's going to play out. Obviously, if things like Tesla or any of these companies accepting Bitcoins becomes a reality, I think that will really kind of force the US government or other regulatory banks across the world to quickly look at kind of regulating Bitcoins. And that really will be the challenge at that point in time.
Interesting. Talking about risk, there's a question on risk. What is your perspective on risk management for entrepreneurs in the current challenging scenario? Should one cut expenses now or use this as an opportunity to spend more money on the business so that when the economy recovers, you get a first mover advantage? This is a question from Isaac Ellos.
So I'm always a big believer of spending a bit of money. So I'm a more of a revenue kind of guy than a cost kind of individual. But it's a management style. It's not necessarily right or wrong. I think there are enough entrepreneurs who built a legacy on managing costs well, and there are enough who built a legacy on growing fast. I think I'm a little more towards the second camp than the first camp. But I think at the same point of time, you can't be indiscriminate. So I would strongly suggest spend on technology, market share, and people, and skip the rest. Really, the rest doesn't matter. Whether it's real estate, whether it's a little bit of building the brand. Some of those things can be kind of compromised in the short term with limited resources. Brands can be people, brands can be a service. You don't have to go out and spend too much money on that. You can definitely cut back on real estate. Spend only on people which make a difference to the business, and the rest of the people can be a little bit more of a bit of a churn, a little bit of a you can keep, but don't compromise on the people who are going to be frontline and making a difference to the business.
Wonderful answer. Now, this is from somebody who's obviously a very young man, and he's asking this to you, Yash B. And his question is, what is your one advice to freshers who want to become investment managers? How can one build up the skills which are absolutely necessary to excel in this industry? Or in other words, what are the qualities you see in a 25-year-old before hiring?
I wish I had asked this question when I was 25. I would have been much more knowledgeable. But no, but I think at 25 you need both things to come in. So I think you need to spend a little time on theory. You need to go through a little bit of textbooks. You need to understand DCF. You need to understand PE. So I wouldn't kind of in these times when everything you do seems to be right. Some of us forget the value of some of these things. But in the longer term, these things will be important. Given the kind of framework Sachin has built, possibly take that and study that and see how he's come up with that framework, which helps him over a very long-term time period. And I think I would spend a lot of time studying all that, because somewhere it goes and sits at the back of your brain. and it stops you from making indiscriminate decisions. So don't think you are right every time, because I know everybody feels that way right now. But sooner than later things change quickly. So while you build a model portfolio and keep checking and rechecking your own assumptions and facts, build a build a build a build a model or a profile or a construct where you define the ceilings and floors yourself, depending on what you're comfortable with. So it doesn't have to be Sachin's framework. It can be an adaptation of his framework, but it has to be something which is for you.
Sure. One question, I can't read the name of the person who's asked this, is, as an entrepreneur, how does one manage work-life balance? And this is the last question I'm asking you. As an entrepreneur, how do you manage work-life balance in the initial stages of building your business?
Thank God you're not asking when my wife is around. I handled it horribly. So I wish I would have handled it better. But I think, I've seen people do it. I've seen people who are equally stretched, equally fanatic about their work. Ensure that they switch off their phones at after 8 o'clock. We have that famous example of Aditya Puri having a non-smartphone 3-4 years back. So I think it's a state of mind. I've not been good at it, so I should not be the person about it. But it's a state of mind. I think you can do it. And I think second, which I did not do well, but in retrospect would have been doing well, is don't give up on your passions, right? So, for example, I had a passion for writing. I had a passion for a lot of sports, which kind of got lost over the last 7 8 years. I think if those passions were maintained equally well, I think the work-life balance can improve. So in that sense, I think 2-3 things. I think we have to switch off, and second is we have to keep our passions alive, because it allows us to switch off. So I think those are those two things which can make a difference.
Wonderful. Talking about sports, I believe you do sponsor a lot of sports for children. You're promoting a lot of sports at a child level in a lot of communities.
Yeah, so we basically, through our CSR program, that's one of our objectives. So we spent some time on that. We've been able to make a difference to some sports, but honestly, we could have done much more.
Wonderful. So, Karan, do you think that this question of risk management will win the prize? The question on perspective of risk from entrepreneurs. I think I love your answer on that. Yeah,
absolutely.
Okay, so, Mr. Isaac Eldos, you are the proud winner of a training session with FinLearn. Our representatives will get in touch with you shortly. That's pretty much from my end, and I think I speak for everybody. Unless Kamal and Sachin have some more questions, and Karan has the appetite and patience to answer.
I have many more questions, but time is not allowing us, and I have this commitment unto Karan for not stretching it beyond 1 hour, and it's kind of him that we have got 1 hour out of his precious schedule. Thank you so much, Karan, for being here. We will definitely catch up with you later again to continue from where we are leaving, because the questions which are there in my mind needs to be answered, and I will definitely come back to you, and would expect that we do another similar session. Thank you so much for this session.
Thank you everybody. Thank you.
My personal thanks to you, because you had organized a nice chess tournament for kids where you had also invited Mr. Vishwanath Anand.
Absolutely.
And I was very, very privileged to get my son over there, and he was really, really very happy. So I would really encourage you to keep on doing this kind of events, and I think it's very, very encouraging for kids. So very, very thankful to you.
Thanks. Thanks a lot. Thanks. See you. Bye.
Thank you so much, Karan. Thank you, everybody. Bye-bye.